Hi, good morning and welcome to yet another video from the Smart CA initiative, and my name is Sri Priya Kumar. And in this video, I'm going to walk you through the amendments to Rule 11 of the company's audited auditor rules. It's called the Auditor and Auditors Amendment Rules 2014. This was notified on March 24, 2021. And as per the notification, these rules shall come into force with effect from the first day of April 2021. So in that sense, it's pretty hot from the oven. So what are these rules all about? The first amendment is a deletion. The specific disclosure we were required to make on specified bank notes pursuant to the demonetization now stands deleted. So it's an obvious deletion because I guess the purpose has been completed. The other changes, the amendments are fairly substantial. So the first one, the objective of these amendments now, the next three that we will be going through, is basically to look at fund diversions and Benami transactions. So it says whether as an auditor you're required to state whether the management has represented to the best of its knowledge and belief. Now the aspects in bold alone I'm going to call out first because the remaining is just how those aspects in bold, the emphasis has been supplied by me, are further described. So in order to understand, we'll first go through only the aspects in bold and I'll put out a far more detailed video on this. So whether the management has represented that to the best of its knowledge and belief, other than and as disclosed in the accounts. Notes to accounts, what should they disclose? Transactions of these types. What is the transaction? No funds have been advanced or loaned or invested. By whom? By the company that you're auditing. To whom? To any person, entity, or a foreign entity. How? With the understanding that the company to whom you have, the person to whom you have given the money, the intermediary, shall lend or invest such sums received in other persons or entities. Now, who are the other persons or entities? Are those who are identified by or on behalf of the company that you're auditing, who's the ultimate beneficiary, or provide any guarantee, security, or the like on behalf of the ultimate beneficiaries. So this is the amendment, the first amendment here, which is significant. This talks about funds given by the company to an intermediary with the understanding that the intermediary shall lend or invest on behalf of the company for the company to be the ultimate beneficiary. So that's the sum and substance of this rule. And the company is the ultimate beneficiary here. The person to whom money is given by the company is the intermediary. Now the next amendment is the reverse. Whether the management has represented that to the best of its knowledge and belief, other than as disclosed in the notes to accounts, no funds have been received by the company for which you are the auditor from any person with the understanding. So the company has received money with the understanding that they shall lend or invest in other persons or entities identified whether or on behalf of the funding party who is the ultimate beneficiary. So this is the second leg, which is the onward movement transaction, that is the fund flow outside of the company. And this, the key aspects to remember across both these sections is that there should be a disclosure in the notes on accounts. The money can be received or paid to any party, a person, an entity, or an intermediary. And this entire transaction can be either express, which is reduced to writing, or implied. So these are the most important aspects. And in these two parts, they speak of only a management representation, which means transactions of this type ideally have to feature in the notes to accounts, and the management should represent to you that they have not undertaken any transaction other than what they have given in the notes to accounts. This is the part that impacts us more because the first two are representations. based on such audit procedures that the auditor has performed, which you have considered reasonable and appropriate in the circumstances, nothing has come to your notice that has caused you to believe that the representations made in terms of funds received or funds disbursed contain any material misstatement. This is the most important change. The other two changes, of course, the next one seems fairly straightforward. Dividend declared or paid during the year by the company is in compliance with section 123. And the last change is whether the company has used such accounting software. You may have seen my earlier video where companies have now been mandated to have software which will contain undeletable audit trails or audit logs. Now, as an auditor, you are supposed to state that yes, my software has an audit trail. 2, it has been operated during the year, completely operated during the year for all transactions recorded in the software, and the audit trail feature has not been tampered with, and that it will continue to be maintained as per the statutory requirements for record retention. So these are the most important, these are the amendments which have basically come in Rule 11 of the company's audit and auditor rules. Now, interestingly, it's supposed to come with effect from 1st day of April 2021. We need more clarity on whether it is applicable for all reports signed on or after April 21, or is it only for financial statements that are going to commence from this year. But as the reading stands, it appears that this rule is applicable today for us. But more clarity needs to come in. And primarily because I also noticed two things. See, the first couple of aspects are only disclosures and compliance. It's only the audit logs which were not previously mandated, which are mandated only now. But then it's a very double-edged sword, because in the past, if your audit log features were not there, then you could not have said internal controls are functioning effectively and efficiently, right? So one has to be very careful in making a representation on this rule for deferment, etc. because of this particular reason. Because we were anyway supposed to ensure that your accounting records cannot be tampered with. So stay tuned for more, and this was a short session on the company's audit and auditor amendment rules. Thank you very much.